Within 48 hours, we will welcome 2022. But for now, it's time to check in on all the changes that will happen in 2022 on the customs and global trade side in Great Britain, the UK. Are you ready to find out about POAO, IPAFFS, VAT, and rules of origin? Then stay tuned in part 4 of our 5-part mini-series. And I am back here, and let's go straight into the presentation. As you know, we are a specialized provider of customs and global trade services and trade solutions for importing and exporting business out of the EU into the UK and really around the world. We offer a one-stop shop approach, allowing our customers, our clients, to reach their clients, global clients, faster. We want to de-risk your business and help you stay compliant. We want to declutter, do away with all the paperwork, or at least put it in some kind of order. And that all allows you to grow faster globally. It's a one-stop shop service proposition, customs file and brokerage, a helpline for ongoing support throughout the year, training and consultancy. As I mentioned, the helpline for ongoing support comes in 3 flavors: free, starter, or professional. So check it out on the website, customsmanager.org. Here are some information about training courses. When you study with us, it's pretty much like you see right now. It's self-paced. There are quizzes. It's interactive. You get to study with me. And yeah, there's a certificate of completion in the end if you can pass the quiz. Are you up for the challenge? Check out the website for more details. And of course, we'd love to be your broker. We'd love to help you file customs declarations, import and declarations out of GB. We'll help you with all your needs. Just reach out to us on the chat and we'll be there to help. So this is the part 4 of the daily web series. We started a couple of days ago talking about imports. Then we looked at the top tips for customs declarations. Then a step-by-step guide on exports was yesterday. Today, it's really a mishmash of different topics that all matter for 2022. Is POAO, so very specific to SPS measures and IPAFFS. Then something people are really interested about, that's postponed vat accounting. And then a session on rules of origin. And then tomorrow, it's the final checklist. This is where we really bring it all together. I'll talk about GBMS. We'll talk about commodity codes. We'll talk about the customs declarations, about IPAFFS, about everything, right? To just make sure that we're ready for the big bam. All right, here we go. So, wow, pre-notifications using IPAFFS, postponed vat accounting, a bit of rules on origin. What's going on? All right. So first of all, we talk a lot about abbreviations. Customs is full of short words. So POAO, what is that? POAO stands for product of animal origin. So this is your live animals, but that is also your animal product. So it could be the cow, the live animal, could be the ham, could be the beef. It could also be products made of beef or of ham. Could also be cheese, of course, or milk, or anything really that is from an animal. And it would really depend on the way it is produced and how much animal content it has. If it's just animal, well, then that's a pure POAO product. But if you get into the lasagnas, so to speak, or the egg liquor, or various other, the tortellini or so, there it's a little bit more tricky. It's composite products. So POAO, as soon as there's some kind of animal involved, you got to think, man, do I need to pre-notify my arrival using the system called IPAFFS. IPAFFS stands for Import of Products of Animal, Food and Feed System. It tells you that it's not only animals we talk about and food we talk about, it's also the feed we talk about. It's also the animal byproduct, ABP, that we talk about. And that could be your carcass, that could be your casing. And be aware that in ABP, there are various degrees of sensitivity due to the risk associated with it. But that's just a side point. So on IPAFFS, you need to pre-notify the authorities when you bring the following goods into GB. Live animals, as I've mentioned, and there's also germinal products. There is a animal byproduct, as I said, and there's high-risk foods and feeds not of animal origin. So I think pistachios would be one of those. And there's also the products of animal origin from the EU, composite products, as I've mentioned. There are plants and plant products from the EU. And there are live animals, as I said, and animal products that are and high-risk foods and feeds not of animal origin from non-EU countries. So the first distinction is the category: live animals, products of animal origin, composite product, plants, and that's roughly and ABPs, animal byproducts, and then food and feed not of animal origin that is of high risk. So these are the first categories. Second step would be to think about, is it from the EU or non-EU? So for the EU, for 26 member states, so there's only Ireland, which is exceptional, we need the IPAFFS notifications for all of these products. For anything that's not EU, so from Canada or from Australia, we always need the IPAFFS notification. Right, quick word on Ireland. So Ireland was one of the beneficiaries. So the Republic of Ireland, so Dublin and Killarney and, Cork and whatnot. So there's Republic, Southern Ireland, and then Northern Ireland, Belfast, and so on. That also benefits from these special rules. So for some reason, Ireland got exempted from that. So happy days. So because we are now in the EU, in the UK, we're not part of the EU, we can't use the EU Traces system, which is the trade controls and export system that we use to pre-notify from outside the EU. Now, we can't do that anymore to validate GB imports from outside the EU and EEA, so the economic area, the European Economic Area countries. So Liechtenstein, Norway, say it, Iceland. Yes. And so we needed a replacement system, and that was IPAFFS, right? IPAFFS is web-based, and you need to use this to apply for the SED, which we know as the Common Health Entry Document. And if we're not going for the full SHED, we're going for a pre-notification. So everything coming from the EU just needs to be pre-notified. Right. How does it work? Well, it's a web-based system. You need to pre-notify, I think, about 24 hours before the goods actually arrive in the UK. And that you need to do from, obviously, the 1st of January 2022. And authorities need to know what you're importing, the date of the import into GB, what country it will come from, and the consignment place of destination. All of that in a little bit more granular detail you can find on the web portal. As you register for IPAFFS, you will be granted access, and then you can complete your IPAFFS notification. So there is an API for this, but for the purposes of this session, we're just going to show you screenshots of how the IPAFFS system works. It's pretty straightforward. I'm just going to summarize it. Obviously, there's much more detail to it. You need to say what you're importing, if it's live animal, products of animal origin, high-risk food and feed not of animal origin, or plant products and other objects. You select that, and then depending on what you select, the drop-down menu or the next screen is going to be slightly different. Obviously, if you're choosing an animal product, then you'd need to choose the country of origin. If you choose EU26, it'll be a pre-notification. If you choose any other country, it'll be, except Ireland, of course, it'll be what? It'll be a full chat. You then need to find the commodity code. So that follows the tariff of the UK. You can search, enter the commodity code if you know it. Otherwise, you can use the drop-down menu. Once you've got the commodity code, there are a few more specifications. They're asking for the type of commodity. So this can be domestic or various. And then below that, the species. And there you need to know a little bit of Latin. So if you don't know what your Latin name is, then you've got to check that out. So you've got to learn a little bit of Latin. So you click that, then you have here your commodity code. So as you can see here, you also see that there is a draft IPAFFS notification number that is in draft until you validate it. There's also weight that's needed, as well as a date of entry, and that obviously has to be in the future. There's also a reason as to why you bring this animal or product into the UK, and you can say you want to sell it in the internal market. It's rejected or returned consignments for research, technical, pharmaceutical, transit, or other. And then it asks you to provide some supporting documents, and here you can upload your EHC if you're after July 2022, and other documents that kind of validate what you're bringing in. So the key thing is that this is used for the export health certificate. And do you remember how this works, right, from the previous videos? It's not your responsibility as importer to create the export health certificate. The clue is in the name, export health certificate. So it's the exporter that has to do it, right? And the exporter has to hold on to a physical, real signed copy, and or real signed document, and you will receive a copy that you can then upload into the IPAFFS. Yes, and then you also, which I did mention here, you have to input obviously who's receiving the goods, who's sending the goods, who's transporting the goods, and the likes of it, and that you can store. So when you have repeat orders or you repeat notifications, you can just reuse those informations again. You then get to review your notification, and boom, you submit it, and that is the end of that. So that should be done 24 hours before you actually send the goods off, as I mentioned, and that is your IPAFFS pre-notification done. And that is something that's going to kick or enter into force on the 1st of January 2022. POAO pre-notifications using IPAFFS. Ta-da! All right, up next, postponed VAT accounting. Now, wow, that's a special one. A lot of people are really interested in that because VAT is 20% and it's quite high. So if you go in a shop and you buy things, milk not, but maybe other products, any electronical stuff like that, it's 20% that is actually added to the price, although we don't see that in the UK or in the EU because it's already calculated into the price, so to speak. If you go to America, you will know it because the general sales tax is not included in the price of the display price, and at the end is added, so you'll see it becomes much more expensive then. Anyway, be that as it may, on import, we need to pay import VAT. And if you want to reclaim it, you need to be VAT registered. And you need to make sure that the VAT you're reclaiming is actually your VAT, point one. And B is not only your VAT, but is the country's VAT, meaning if you are in GB, then it's GB VAT, UK VAT, and you can only claim UK VAT from a UK registered VAT business. Does that make sense? So if you're a VAT registered importer, you can continue to use postponed VAT accounting. This is the VAT account, the accounting that's the new way of accounting for VAT that was introduced as part of the Brexit. Not that you needed to Brexit to introduce this, but that's a different matter. So anyway, we've got PVA, and that can be on all customs declaration, and that does away with the previous method. Doesn't do away, but kind of replaces it. If you don't want to use it, you have an option, right? You can use this one or that one. Usually, PVA is very popular. It's very, very helpful. It offers a significant cash flow because you don't need to pay the VAT in advance. You can then already just make it an accounting exercise, so to speak. Anyway, so if you have a VAT number and you want to use postponed VAT accounting, provided you are allowed to do that, you may wish to do so. As I said, it has these benefits. So you would need to import into Great Britain from anywhere outside the UK, and there is also Northern Ireland in the mix. You can account for import VAT for goods that you move between Great Britain and Northern Ireland, and that are declared into a customs special procedure when they are removed from that special procedure. And you do not need any specific approval to account for import VAT on your VAT return. Now, this is for established VAT businesses. So you would need to have a VAT registration number in the UK. Now, you do not need to be established in the UK to hold a GB VAT number. So there are non-established taxable person that might want to ask what to do. So a German company that has a GB VAT number, what are they going to do? Are they able to use postponed VAT accounting? So obviously, step one, if you're not in the UK, you will need a bit of help in order to lodge customs declaration. So you need an agent such as Customs Manager Ltd, and then we can make your customs declaration, and then you need to tell us whether you want to use postponed VAT accounting or not. And if you want to use it, you need a VAT number, GB. Yeah. So if you want it, you need to tell us that you want this, and then we will do the necessary steps in order to make sure this happens. So you will need, as I said, your VAT number, and then you need to also meet the conditions to be able to do that. So what does that mean? First of all, it will only make sense really if you make VATable sales in the UK that you can then offset. So the VAT paid at import, you will then offset against the VAT you've charged and collected. That kind of makes sense. So rather than first collecting it and paying it, you first pay it and then collect. Yes, kind of, yeah. So that's step one. If you're not going to make any sales, then you can't really offset it. Second, you would need to meet the rules to be able to account for UK VAT in your VAT return. So there are specific rules when you actually can, and obviously the first one is it needs to be your VAT. So if you are the importer and you use the goods, maybe to sell the goods onwards, then you would be on the import, you would be charged VAT, and on the onward sale, you would charge VAT yourself. So that would make sense. You can then use the VAT return process to claim that back. But you need to use it for your business, right? So you can either sell it or you can use it in any other way for your business. That is a possibility. That's rule one. And rule two, it needs to be included in your customs declaration, which is why we ask you to tell us what you want to do. So if we're not registering it at the import, then it's going to be difficult for you to use postponed vat accounting. Now, this is really important if you are doing things like DDP shipments, right? So if you are doing a DDP shipment and into GB, then really the point where the goods are imported might not be the point where they are in the position of the business and they can't be used for that importing business. So there's a question mark around whether you can actually account for that under DDP terms. So it's just an example, don't let that confuse you. But it's a little tricky when you use certain Incoterms, that's for sure. So the other time when you can't use this is when you know that you will be solely using it for non-business purposes, unless you're authorized to do so. Right. So once again, the key points to make, you can only really use postponed vat accounting if it's used for your business, and secondly, if you're sure that it's your VAT. Right. So you're the import of record. You're going to use the good. If you're the import of record, but the goods are not for you, but they're for someone else, maybe because of the Incoterms, then it's not really your VAT. And if it's not your VAT, you really can't claim it. Anyhow, yeah, enough said about that. If you're using us as your customs clearance agent to import the goods on your behalf, as I said, you need to tell us if you want to account for import VAT. So we can make the customs declaration for you, and then you will keep a record of what we agreed. We will keep a record. That is it. Right, that's enough about postponed vat accounting. Let's go to the final topic, and that is rules of origin. So obviously, the origin of the goods matters, and we have specific rules in our trade incorporation agreement, the TCA, and that means that the goods that you import or export may benefit from a reduced rate of duty, and that's called tariff preference. And for this, you will need to make sure that the goods originate as per the terms of the agreement. And for that, you need proof that the goods you import from the EU to GB, they originate from the EU, or whether you export them from the UK, that they originate in the UK. So they go to the EU, but they come from the UK, so you need to make sure that they actually originate from the UK in a simplified way, right? So when we say originate, we mean where the goods have been produced or manufactured. So this could be the materials, the parts, or the ingredients that you use to make these goods. It's not where the goods have been shipped or bought from. That may be the same, but it doesn't have to be. And the goods will need to meet the product-specific rules that you can find in the annexes of the trade agreement as set out in the TCA. Now, if you want more information on rules of origin, we have a information hub, a guide, a resources page on customsmanager.org. You need a starter subscription to get started. That starts at £1. £1. And then this unlocks and explains you everything about rules of origin, what to do and how to claim and whatnot. Yeah, lots of videos, lots of information, all of that. So if you want to claim a tariff preference, then you need a proof of origin. You can either do this with a statement on origin, and this must be made out by the exporter to confirm that the product originates in the EU or the UK respectively. You can use importer's knowledge, and this option allows the importer now to claim tariff preference whether based on the knowledge that the importer has that the goods originate. And there might also be a need for a supplier's declaration. So this is when you use the statement on origin, and these help the exporter to confirm the origin of the product and explain a little bit how they are manufactured and so on to prove that these meet the specific rules of origin. If you want to know more about supplier's declaration and all of these statements on origin and importer's knowledge, then again, there is the expert blog on customsmanager.org that explains all of that. There's also online training on rules of origin, and there's live training on rules of origin, and that specifically for the TCA, and that repeats on a rolling monthly basis. So just check it out when you go on customsmanager.org/training, and it'll tell you all about it, shows you what the live trainings are, what the online learnings are, and so on and so on. It's just really easy. Now, with the supplier's declarations, there was an easement in 2021, and that allowed you not to hold a supplier declaration and still issue a statement on origin. That's now being removed, meaning that in the UK, you at the very least need statement on origins going forward into 2022. In the EU, it's even stricter. You also need the statement on origin of 2021 that you didn't have because of the easement. These easements existed in the EU and the UK, but they all run out in 2022. So yeah, you better have any supplier's declarations to back up your statement on origin, ideally for 2021 and for 2022. If this is all googly-gook and you don't know what I'm talking about, well, then please have a look at customsmanager.org or reach out in the chat and I can explain everything to you again until it's clear. What else? Just know that the EU authorities as well as the HMRC may start to check, may request supplier's declaration and proof of that happening. And if that happens, you might be selected for an audit. They may come in, they may check, and they may issue fines if they don't find their supplier declarations. And please note that, of course, if you can't back up the proof of origin and you have reduced the duty to zero when you really should have paid, then of course you will be paying that extra duty. And of course, you will be asked to maybe pay a penalty and or interest may be charged. Wow, that was a lot. Was it not? Was it not? But I hope it was useful. It was a pleasure again to meet you and to discuss with you in part 4 of our mini-series on how to prepare for the export changes in 2022. I hope you found it useful. Thank you so much for watching. Tomorrow is the big day. Are you excited? Are you going to tune in despite it being the last day of the year? I hope you will, because this is the one where we really have the checklist to get ready for the new year. So if you're ready and I'm ready, I'll see you for the final part tomorrow. Bye for now.